Hey traders from around the world, it's Jeremy Alexander Newsom with your Monday real life stock review. And yes, my girl Cathie Wood and her stocks are getting absolutely murdered right now. So is all of tech. So let's go ahead and talk about it right now. First, your main call to action in this video. Go to reallifetrading.com and click on the live trading course. Join our afternoon swing trading room so I can help you really effectively time the market moves to get in, to get out, and to know when to get in and to know why to get out, and do your absolute best to just navigate this movement. And of course, if you're just long-term investing, I'll give you the confidence to hold, right? If that's the worst I can do, it'll help. So the cues, we do have a head and shoulders pattern. It is here. Bang, bang, bang. We did close below the neckline, and we have retested the neckline. It's not that pretty. We can go lower, and I do expect us to slightly do so. Now, this candle on Friday is like the Helen of Troy wall of walls. So if we close below that candle on the cues, I see no reason why we wouldn't go lower. I did actually buy some puts on some positions today, and I'll talk about that in just a moment. Those positions did both close below the hammer that came in on Friday. And ironically, the last hammer that was this size that we closed below immediately was back in March 2020 during COVID. The very next day you got the close, and then we just crushed down for about 5 more days, and then the absolute low was in. So is that going to happen again? I'm not entirely sure, obviously, but I do think that the market's extremely bullish long term. We can get some more pullbacks. I think we are going to get a little bit more of a pullback. In essence, we can go down probably to about 280 on the cues, but realistically, I think we go higher after we go lower. This is ARK. Everyone knows about the ARK ETF. Everyone talks about it. Everyone loves it. It was the hottest things in all of the market until it kind of wasn't. Now, the interesting thing is, if we talk about COVID, right, the growth that it had, 250%, that's maniacally massive. All we're doing is we've pulled back about 25% of that. This is really going to show some traders what it means to make some money on the upside and then hold, right? As the pullbacks occur, you're going to get steep. It's going to be quick. It's going to be gnarly, ugly, scary, terrifying, frightening, all the things. But as long as you're buying good companies at good valuations, at good prices for good long-term levels, I think you're going to be just fine. So yeah, ARK ETF, the main one, you had the hammer of hammers. Came in on the 23rd of February, and then we closed below that candle just a few days later. That was your bearish signal, or at least your signal to sell some, or at least your signal to buy some insurance. So ARK ETF started selling off. Another one, Palantir, PLTR. I am actually watching this one very closely. You did hold up decently well on March 4th there on Palantir, but we since then have gone lower. Now, this is an absorbent amount of bear candles in a row. 1, 2, 3, 4, 5, 6, 7, 8. I can barely count that high. The last time we had this amount of bear candles was kind of back over here, and then we just randomly had a massive surge one day. So the big question, of course, is, are we going to be able to keep that up? And I don't know the answer to that. Although if we do have some type of strong bullishness this week, I would buy that bullishness if we especially get a good close. I am watching it. I do have some May $40 call options. These are absolute zero. I feel like they're relatively inexpensive. They're about $1 right now. And if Palantir pops back up into 30-ish and some change, they'd probably be worth at least 2 or 3. So, that could be working out okay. But anyway, buy low, sell high on Palantir. If we take out this hammer, I don't really see a reason why we wouldn't go all the way back down to 11. So, I don't know. Something to think about. And of course, Tesla, the king of kings, right, was at 800 and some change, pretty much 900 back in January. Everyone, their mom was like, it's going to go to 2,000 by March, and it's not. So it's just pulling back. Tesla, obviously, one of the largest companies in the world, one of the most innovative companies in the world. This is a pullback on Tesla. We are getting it. We had a big pullback over here. That was a COVID. That was a 60% pullback, in case you're wondering. Huge pullback on Tesla back in COVID. Well, we're not actually in COVID right now. Apparently, it's not really an issue. So if we go down to the 200 simple, that would be a 50% pullback, which I want everyone here to know that is very, very possible. In fact, extremely likely will happen on Tesla. And that'll be the spot to buy. If Tesla pulls back down to that area, buy low, sell high, be an owner, not just a consumer. being it longer term, I do absolutely think Tesla rally is out of this. It's just going to take longer than most people expect. There is a 0% chance, in my opinion, that Tesla will make it back up to 890 before the end of May. Most likely, we trade down here, we'll kind of consolidate for a little bit, something like that, and then eventually go higher. But it's going to take some time. This is a really, really big pullback. And the thing is, everyone all across all aspects of social media are saying, buy the dip, buy the dip, buy the dip. So they've been conditioned to do that. The challenge is right now that the dip's just a little bit bigger than a lot of people are going to handle. So traders are going to be freaking out during this move. They are going to be kind of scared. Some worries coming in, some panic is coming in, especially traders who are just a little bit newer or people who don't want to invest for the long term, right? They want to get really rich very, very quickly. And so they're making these moves and they're trying to over leverage and they're just not holding long enough. So on Tesla, if it pulls back, buy more, be an owner, longer term, this one will work out just fine. Just have to have a nice, calm, healthy pullback on Tesla. And that's, in my opinion, pretty much what's happening. So we will see. Fastly, also down a butt ton. And a butt ton, if you're wondering, is about 60%. So from the highs of October to where we are now is right at 55%. Now keep in mind, I bought back in November and thought I was a giant moron. And then we had this gorgeous, gorgeous move. And that worked out extremely well because from 65 and some change back up to 120 is about 82% return. So can Fastly do the exact same thing in the next 5 or 6 months? I think it's plausible. We will see. I do have some longer term call options on Fastly and we will find out. But for right now, I can say this. It is a little scary. No question. It is a little scary. It is a little concerning. I will watch it. I will wait. We will see. But I'm not going to rush it. I'm not going to do anything too crazy. But I do have a plan to buy some puts if we break below 57.85 on Fastly. I'll get into some puts. The stocks I did buy puts on today, Zoom. Zoom closed below this hammer immediately. Immediately closing below that hammer, taking out this support, lower lows, lower highs, gapped up on earnings, bearish engulfing candle. I think Zoom could slowly get wrecked, more or less. Weekly chart, you're below all main moving averages. Granted, we've sold off for 4 weeks in a row, so there will be a little bit of a bullish rally coming soon. And I don't know if it's going to be a dead cat bounce or not, but really it's just a protection, right? It's always good to have the insurance and not need it than not have it and wish you had it. So on Zoom, I bought some insurance. Apple, I actually don't have any position on Apple, but I did buy some puts just in case. Apple closed below this hammer on February 23rd and the hammer on Friday today. So I bought some puts just in case it goes a little bit lower. And then AMD. Granted, I know I'm buying it at the absolute worst price possible, buying some puts here, right? This is an incredibly, incredibly strong support. And we probably have a small bull candle tomorrow. But my plan was if AMD closed below the hammer, then, well, in essence, buy some puts. Because on a weekly chart, AMD could go all the way down to 55 sometime this year. I'm not saying it will happen, folks. I'm just saying it's a possibility. So please make sure that you know how to short. Make sure you know how to play some puts because you guys are all familiar with the Momo strategy. Momo has been short on many things since early February or late February. AMD, we've been bearish on it since 18th of February on the daily chart. On the 78-minute on Momo, it's been short since March, right? You had 1 day of long, and it was also short back here in the 17th of February. So Momo, you can go long on Momo. You can also go short on momentum strategies, my friends. Make sure you know how to play, even if it's a day trade. Make sure you know how to make money when the market goes down because it does look like we have an opportunity to go a little bit lower before we eventually go higher. But hey, either way, I will be there to guide you. Make sure to join Real Life Trading. Be in the swing trading room. This will be a cataclysmically wonderful year if we time everything correctly, and I think we will. So, my friends, thanks so much for watching this video. You are amazing, and I will see you later. Goodbye.